So, a glaring new conflict of interest undermines the public trust in the Federal Reserve. Well, I have been a while since I've done an economic video blog, and I'm going to do one on BlackRock, probably the premier dominant player with over $7 trillion in assets now, and I think they manage something like $15 trillion of assets, have fingers in that many. And I'm going to talk about the difference between BlackRock and Blackstone. They actually do have this similar pedigree, and how it shows where we're going right now. Why the billionaires are getting richer, why they can't seem to lose, why the idea of making all the liabilities the taxpayers issue and all the profits and all the assets be that controlled by a smaller and smaller pool of global elites. So that's going to be the conversation of this short blog, and let's jump right on it. Wall Street Journal, this is back in April, late April, said, "Is the Treasury slowly taking over the Federal Reserve?" That ends up not being the case. That's more of a shell game. It talks about, and everyone has talked about this, QAnon and other kinds of things. Oh yeah, Trump's going to get right in there and he's going to get rid of the Federal Reserve and the Treasury is going to take it over slowly. He's got five-dimensional chess game going. That's bull, everybody, in case you haven't noticed. Trump is a tool, and this actually shows that he is. He doesn't understand the complexities of that. What he understands is money in his pocket. And he's a wannabe in that group of truly deep staters, which goes way above presidents and way above bureaucracies. It goes into people that end up pulling the strings and who can pick up the phone and call literally anyone in the world, and not only call them, but largely tell them what they need. And again, a lot of that power is generated because we're such an interconnected global system. And in those interconnected global system, both the interconnection and the global part of it create great risks. If one of it falls down, it creates a domino cascade effect on the rest. So who do we go to guards in this? We go to the people who have the biggest chunk of money, or who manage the most, and who, quote unquote, are experts in that. But what are they actually experts at doing? Well, they're experts at making money for themselves and their friends, as we've seen with the unprecedented global concentration of wealth. And is it healthy for the economy? Heck no. Somewhere on the order between 20 and 30 trillion is being squired away into these offshore accounts, and we don't even have track of it. Now, what are they going to do with that money, given the fact that the rest of us are finding our work being taken by automation, by a huge contraction in the economy, which is obviously providing more opportunity for these people to try to buy up more assets for pennies on the dollar, not only managing the assets, but now with private equity actually buying the assets, to the point where it looks like we could be a completely rentier landlord economy and not own anything and just pay rent. Essentially a global company town. So let's look at what's going on with these two. Let's jump right in. No, the Treasury is not taking over the Federal Reserve. Private billionaires owning trillions in assets are basically taking over everything and telling the government what to do. That's the answer to that question. Let's go to our second one here. Again, the two main players, Blackstone and BlackRock. BlackRock is led up by this guy, Larry Fink. Larry Fink is supposedly a donor to the Democratic Party. His former partner, the guy who runs Blackstone, which we'll talk about later, is a so-called Republican. But what does it matter? Those are just games. The actual money making, the actual side that they're on is the side of wealth over and against working class people, working class assets. I'm sure they wouldn't see it that way in their own minds. I think that they could be doing what Jamie Dimon says in their own mind, doing God's work, using their magnanimous ability to understand money to just move us into the next phase. Well, the next phase keeps being a concentration of wealth and an impoverishment of people. No accountability is being registered in this process. And so we have to start by looking at who we're actually dealing with. And that's really all this video is going to do. I don't make a whole lot of recommendations in terms of what to do with this at this point. I have done that in my book, Transforming Economy, and I've done that in some of my other commentary. A recent one on Of Two Minds, a 5-part series, and I was just on Max Kaiser's the Kaiser Report, explaining some of those alternatives. If you're interested in looking, and just Google my name and Kaiser Report, or Google my name and Of Two Minds, and you'll come up with a whole series of articles that really deals with the public, popular, and working class and grassroots side of this whole thing. So we have here, again, it says, Trump pushes back against a congressional oversight for $500 billion bailout fund. If you realize they put language into this fund that went out during COVID, this is March 28th, during April, basically. And they said, oh, great, there's language that says there is an inspector general. Guess what? Be the commander in chief and the top of the executive. And I'm going to ensure that you get nothing, no feedback at all. And guess what? The Republicans were the Democrats were chumps. The Democratic neoliberal establishment were chumps. They went with it. They just needed an excuse before they got pwned. And that's exactly what happened. Steve Mnuchin took the money, handed it out, and the Democrats and our public doesn't know anything about it. It says the language gives the inspector general power to report back to Congress information. It gives them the power, but that power is being stopped by the president. Great. Quite the democracy we have here. Next little thing to help with this. So let's click on that. So here we are. What is BlackRock? Again, this is the dawn of the BlackRock era, and this is I think this is what's from the Prospect. Yeah, prospect.org, nonprofit, sort of progressive magazine. They explain it this way. BlackRock is the world's biggest asset manager, handling $7.4 trillion in customer assets. It's twice as profitable as Goldman. It's got offices in 30 companies and clients in 100. The company's Aladdin risk management system, an industry standard software tool that monitors trading, watches over another $20 trillion in assets for 200 other financial firms. Talk about centralized power. This makes BlackRock part money manager, part institutional investor, part software platform, and part government partner. It's a pioneer in junk bonds, unsurprisingly, and has often been referred to as the world's largest shadow bank. Pretty good description, actually. Who's Lawrence Fink, the head of it? Here he is. Billionaire businessman, okay? But he has such a kind face. Look at that. He's like a little cuddly bear. You just want to hold him. I guess he cultivates that on purpose. I'm not sure. But he's not so cuddly when it comes to the way that he's dealing with things. Again, he has about $7 trillion in assets, a wide range of investments, according to his firm BlackRock. Activists and economic watchdogs have tried to get BlackRock designated as a systematically important financial institution that would subject it to highest legal standards. If you're the highest, biggest asset manager in the entire world, why wouldn't you automatically be designated that? And that's an interesting question right there. Here's the next. Okay. Oh, this is another one, how BlackRock rules the world. The new pecking order emerged on Wall Street. Big banks remain powerful and incredibly profitable. Quarterly incomes have hit record levels throughout 2018, largely due to benefits from tax cuts. But a decade of financial crisis, regulatory pressures, and most important, new investing trends have transferred power to a few dominant asset managers. Again, we're having the consolidation. Too big to fail, too big to jail has becoming much bigger and much less likely to be jail. As more Americans plow retirement savings into passive funds, the buy side has overtaken the sell side. Again, they're so flush with money, especially with the zero interest rate policy. Literally now, when you have free money, you can basically, as they do with stock buybacks, borrow that money endlessly against the collateral of your own company, buy up your own company, increase its value, borrow more money. So now you're awash with cash. What are you going to do? Buy up every material asset in the world. And that's what private equity firms are doing. And some of these other ones. And that's also what, Berkshire Hathaway was doing too. They try to find well-functioning companies and buy them up. The private equity companies do it, hollow them out, sell off their assets, replace their high-quality projects with cheap crap, and oftentimes bankrupt them with debt. but make a huge amount in terms of fees in the meantime. So they're different methods, some of them more destructive than others, but for the most part, they are exactly doing the same thing, hyper-concentrating wealth in the hands of fewer and fewer, and power as well. So what do we have here? Wall Street on parade says BlackRock is bailing out its exchange-traded funds with Fed money and taxpayers eating the loss. Again, because there is this conflict of interest, Fink and BlackRock's being tapped to manage is getting extraordinary fees to do it. Then they're given power to make decisions, and then they can make decisions that benefit their own stock portfolios. Now, this has only gotten worse and worse. In fact, the government just recently, and I showed this in my series of articles on Of Two Minds, had even begun bailing out junk bonds. Yes, you read me right. Junk bonds, non-investment grade bonds, are also being bailed out by the Fed. The first time it's 107-year history. It's like you can't lose right now by being elite. You literally can send your company into the ground and you're still going to be bailed out, even with junk bonds. It's getting crazier and crazier. I'm a great fan of Ellen Brown. She, instead of plowing money into these managers who take off hundreds of millions and billions of dollars off the top just to do management and charge fees, why don't we create our own public banks? And she lays it out really well here. California has over $700 billion parked in private banks earning minimal interest. Private equity funds that contributed to the affordable housing crisis, or shadow banks of the sort that caused the banking collapse of 2008. These funds, or some of them, could be transferred to an infrastructure bank that generated credit for the state, while the funds remain safely on deposit in the bank. You've got the money. You're not just lending it out to some thief. And you can circulate it out, do minority businesses and other things to actually increase the infrastructure of your state and support small business and so forth. Who wouldn't want that? Well, that's exactly where you would go if you wanted to support communities, the grassroots, small business, minority communities, and broad prosperity, middle class and working class prosperity. But that's not the game that these guys play. And whether or not it's conscious or unconscious because they just live in their own castles all the time and have no clue about how things work, they still have to be held accountable. So, again, she said that California needs over $700 billion in infrastructure during the next decade. Where's the money going to come from? Use the money from the pensions to fund those. Get rid of the middleman. Just like Medicare for All. You get rid of the middleman in Medicare for All, you're saving $500 billion a year just by cutting out these parasitic and rapacious so-called insurers who are dedicated to charging highest premiums and denying actual service and health. So that would be another thing that would help. And forget about preventive health. They don't even care about that. So here it is. BlackRock becomes a key player in the crisis response for Trump and the Fed. They go to these guys. All right, this is part of the market mythology that all the bankers, all the free marketeers, they're the ones who really know. They're the ones who are more efficient. Well, if they're so efficient, then how come the Social Security and Medicare have such a small administrative cost, and these yokels have this huge 20 to 30%? It's less than 1% for Medicare. Why would you be saving $500 billion a year if it's so efficient to go to the private market when it comes to medical care? It's not. They make their money by creating inefficiencies, and in those inefficiencies generate their profits and their fees. The market is based on inefficiency. Okay? Inefficiency. Every friction point creates an opportunity for parasitic siphoning off. Okay? Because that friction says, hey, I intervened in this process, I get a piece of the action. So get that in your head, everybody. The notion of an efficient market is a complete and utter myth. The modern monetary theory, the modern market, is based on inefficiency. And it's that inefficiency that's creating such concentration of wealth. Actually, government and actually a state bank would make it a much more efficient, and a Medicare for All, because it would funnel money directly from people into a single payer system that controlled costs and didn't have a middleman, didn't have that friction and that inefficiency in between. So anyway, off my rant. Here we go. Next there. Okay, so here's a Quora, and they're talking about the difference between BlackRock and Blackstone. Remember, Schwartzman was the guy who did Blackstone. He and Larry Fink, he was a Republican. He had a relationship with Larry Fink. They were actually worked together, and these two things split off. So though they're confused because they basically say the same thing, one says BlackRock and one Blackstone, maybe they're making a joke out of it because they did have a relationship way back when. The only difference now, they're both very powerful, both very big, is that the BlackRock is more the traditional asset manager, which has to do with bonds, ETFs, and so forth. Whereas Blackstone is more of a private equity or real estate fund. The first, that's Fink's company, has to do with things broadly. The second, like many private equity, hedge funds, real estate funds, have to do with just dealing with the hyper wealthy, very wealthy people. And it's a private company as well. So as it said here again, BlackRock is mostly a traditional asset manager, which mostly deals with mutual funds, ETFs, fixed income, and so forth. Blackstone, on the other hand, is purely an alternative asset manager, which deals in private equity, real estate, and hedge funds, and caters to high net worth individuals. Okay, so those are the more rapacious ones. The other one, you know, it's going to use fees and other things to accelerate concentration of wealth. But see, that's the difference between, I guess, Democrat and Republican. The Democrat is Republican light. We'll give you a little bit of it. We won't be as rapacious as the private equity firms. Whereas now the amoral Republicans should just say, let's just maximize our return and parasitically take as much as we can. We really have, and I will just confess this, I don't like the neoliberals. BlackRock is a neoliberal institution. Blackstone is a neoconservative institution. The neoconservatives, the Ayn Rand markets, hey, you know, if you can go ahead and use monopoly power, whatever, go ahead and do it, okay? And just take as much money as you can and run and dump all your liabilities off on someone else. The neoliberal one is like, well, we'll take an enormous amount, we'll have power over the entire world, we'll manage other people's assets, we'll charge huge fees and make billions doing so, you know, but we don't want to make it hurt too much. We don't have an answer to automation. We don't have an answer to the environment. We don't have an answer to any of these things, but at least we're a little softer than those guys over there. It's both bull. In the end, it's both bull. And I believe it's going to come crashing down. What happens when you have a massive contraction of demand? I've talked about this in my previous articles on Of Two Minds. What happens when you have that massive collapse of demand? To say it again, COVID, people staying inside, people not going out, small businesses closing, people moving in together because they can't afford rent, commercial real estate going to be tanking in the next half year to a year because there's no one to buy up the space. What happens when you have those huge contractions and these people are owning a lot of it? Well, maybe in the short term they think, aha, I can buy things up for pennies on the dollar. But a lot of them are already invested in real estate, so much so that they're trying to get rid of it now. Here's Blackstone. Great. This is a Reuters article. It says it offers a sweetener as it tries to sell 1.2 billion of Spanish properties. The Spanish market is collapsing. Blackstone owns a big chunk of it, 8,400 properties in Spain, in the teeth of the country's deepest recession. And they're giving people like a 10% guarantee. Well, if it falls by 10%, we'll still cover that. Well, they're building into their own losses, knowing full well it's going to be far more than 10%. Anyone who takes that's a sucker's deal. I wouldn't even be doubtful if, and this is what happened in 2008, if they're actually creating bets against the market right now and attempting to run it into the ground while they sell this stuff out and get themselves a good kickback on running it into the ground and selling their properties off and sticking all their losses with the greater fool. And if that doesn't work, then you go to central banks to have all your stuff bought up. And if that doesn't work, just charge it directly to the citizens, to the taxpayers of the world. So that's probably going to be their plan. It has been for the last, since the 1980s, and I don't see it stopping now. So here we are, Wolf Street. This is also, I love Wolf Richter. Really recommend his site as well, wolfstreet.com, and he also refers to private equity firm Blackstone, Spain's largest landlord, trying to unload its properties. So that gives you an idea. I gave you a little bit of a summary where I see this going. Until we have a popular revolt, we don't need a revolution. We simply need to draw demand and money away from this. That would be helped by public banks, where we take over the government, establish, for instance, in California, public bank, withdraw all our money from these crooks, use that money to enhance our communities, enhance our businesses, enhance the diversity of those businesses, enhance our infrastructure, and tell these guys to take a hike. We don't need to be giving the hundreds of millions and billions of dollars to basically rip us off blind and not take any kind of risk or responsibility for running these things. So that's my opinion. I'm sticking with it. Until next time, this is Citizen Zeus signing off.